Now referring to you, my dear friends, concept of composition scheme applicable for our May 2024 CA final, CMA final exams especially. Of course, the syllabus of composition scheme is also be there for the intermediate level of CA Inter, CMA Inter, CS Executive is there it is. But in spite of that, my presentation for the focus attention on to CA final level, CMA final level, CS professional level. Now I am bringing to notice composition scheme which is applicable for our forthcoming exam of May 2024 exam onwards. With all amendments has been taken place up to 31st October 2023, as I told you, well applicable for our exam. Based on this, all amendments taken into account, presenting this up to 31st October 2023 amendments based on the Finance Act 2023 is applicable to our coming exam of May 2024 onwards. So in this regard, my dear friends, I am just presenting here first and foremost. Look here, a trader, a manufacturer, or a restaurant service provider who located in the taxable territory. India is a taxable territory. Of course, here India includes not only boundary lines but also into the surface of the sea up to 200 nautical miles, we called as the deemed territory of India. So a trader, a manufacturer, or a restaurant service provider who is located in the taxable territory, whose aggregate turnover in the preceding financial year does not exceed 1 crore 50 lakhs. 1 crore 50 lakhs. If that is the case, the trader or manufacturer or the restaurant fellow has the option in the current financial year to choose composition scheme. Sir, what benefit composition scheme provides to the taxpayers? They are allowed to file the return quarterly, they are allowed to pay the tax quarterly, and their payment of the tax is very, very negligible rate. CGST 0.5%, SGST 0.5%. If the restaurant fellow CGST, HGST 2.5% each, that much only they are liable to pay, not more than that. Not more than that. So, sir, we have all over India, pan India, 28 states plus 8 union territories. For all the state or UTs, together 1 crore 50 lakhs? Yes, sir. Pan based turnover it is. One pan holder might be possess multiple registrations under GST law across the India. All put together, it is 1 crore 50 lakhs. Should not exceed their aggregate turnover in the preceding financial year, means previous year. However, if you are being a taxable person located in the following states, namely Arunachal Pradesh, Manipur, Mizoram, Meghalaya, Nagaland, Sikkim, Tripura, and Uttarakhand, namely Uttaranchal. In these 8 states, if you located place of business, being a trader or a manufacturer or a restaurant service provider, your aggregate turnover in the preceding financial year does not exceed 75 lakh. 75 lakhs only, not the 1 crore 50 lakhs. Rest of the India states or UTs, it is 1 crore 50 lakhs. If the given following places of these states, then in that case 75 lakhs. So what happened a case where I am ex private limited having 2 units, sir, one in Tamil Nadu, another one is, let us say, in the state of Sikkim. In that case, what is my aggregate turnover for referring this particular composition scheme option, which I am now presenting with the help of illustrative example, is as follows. Look here, my dear sir, I am bringing you to notice one example. As I told you now, if there is X private limited, which is a registered person at GST law. For example, if it is a registered person at GST law, maybe under normal scheme, now they want to go for composition scheme, where the turnover of the 2 units, this experiment has 1 unit in the state of Tamil Nadu. In the state of Tamil Nadu, it should be like this. And another unit, let us say, in the state of Sikkim, as I told you. Now here I am presenting, it is unit A in Tamil Nadu, then unit B here, unit B located in the state of Sikkim. In that case, here aggregate turnover, when you refer here previous year, preceding financial year, otherwise we also called preceding financial year, aggregate turnover in the state of Tamil Nadu, let us say here it is rupees 45 lakh. Here it is rupees 40 lakh. Like that is given. In that case, X Private Limited aggregate turnover, if you refer, it is 45 lakhs plus 45 lakhs plus 40 lakhs. Total previous year, how much it is? 85 lakh. Now, in that case, in the state of Sikkim, are you eligible for composition scheme? In the given state of Sikkim, are you eligible for the composition scheme? The law of the land here says that you are obviously not eligible, because in the state of Sikkim, your limit is how much? 75 lakhs. In the given case, in the state of Sikkim, not eligible for composition scheme. If not eligible for composition scheme, my dear friends, if there is a case, tell me, in the state of Tamil Nadu, aggregate turnover up to 1.5 crore, aggregate turnover not exceeded, then go for composition scheme. Aggregate turnover here 45 lakhs plus 40 lakhs, 85 lakhs only, well within the 1 crore 50 lakhs. In the state of Tamil Nadu, ex-person can go for this composition scheme. The law of the land says that sorry, you cannot go for this also, because it should be all India basis. Either you may be under composition scheme or you may be under the normal scheme. If you are eligible for composition scheme, all India basis, all your units may be having multiple registrations with the same PAN number. We call them distinct persons. Should have to have one option, either composition scheme if they are eligible, if not normal scheme. In one state of the particular company disqualify for composition scheme, in all the other states or UTs, that company also disqualify from composition scheme. Resultantly, for the ex private limited, in the given case, the higher limit of turnover 1 crore 50 lakhs does not apply. For ex private limited, the aggregate turnover is remains 75 lakhs, since they have one unit in the state of Sikkim, like that in the state of Arunachal Pradesh, in the state of Manipur, Mizoram, Meghalaya, Nagaland, Tripura, Sikkim, Uttarakhand. These 8 states, if you have the place of business, your aggregate turnover being a trader or a manufacturer or a restaurant service provider, 1 crore 50 lakhs not applicable, only 75 lakhs only applicable. In that case, ex private limited, Tamil Nadu unit, in the given example, not eligible for composition scheme. The limit is 75 lakhs only, all over India basis for this particular ex private limited. Now please come back where we are referring the concept of aggregate turnover should not exceed. So we came to know this aggregate turnover, my dear, how to determine, I will explain to you in due course. For the time being, understand this aggregate turnover should not include one, GST taxes. This 1 crore 50 lakhs or 75 lakhs should not include GST taxes. If included, eliminate the GST and see the value. That value, if applicable, well within the 1 crore 50 lakhs, or if applicable 75 lakhs, well within the 75 lakhs, you are eligible for composition scheme in the current year. That is not a compulsory, is an optional scheme. If you are eligible, you have the option to choose the composition scheme or not to choose the composition scheme. Further referring to you, my dear friends, here. What about a service provider? What about a particular service provider? Look here. After the completion of this, I am referring this. Here. A service provider other than restaurant service provider, like a chartered accountant, a cost accountant, a company secretary, chartered engineer, or manpower supplier of services, or any other technical services, technical services, plumbing services, housekeeping services, or whatever you may be called. A service provider other than restaurant services supplier. For such supplier of services, all over India basis, their aggregate turnover should not exceed in the preceding financial year 50 lakhs. Here there is no discrimination. Sir, if you locate in the Arunachal Pradesh, Meghalaya, Mizoram, Nagaland, Tripura, not like that. All over India, aggregate turnover not exceeded 50 lakhs for a service provider other than the restaurant service provider. Such a service provider is eligible for composition scheme at their option, but not compulsion. If they choose this, what benefit they have means they are liable to pay CGST 3% only, SGST 3% only, and that payment of the tax also quarterly, filing the return quarterly. They are free from maintaining the books of accounts under the GST. Turnover based tax it is. Benefits are there. Of course, there are demerits also is there. Demerits I'm not referring. For the time you understand who are eligible for composition scheme, whose aggregate turnover in the preceding financial year does not exceed 50 lakhs on all over India basis, being a supplier of service other than restaurant services, that supplier of services supplier eligible for composition scheme in the current year at his option, but not compulsion. Further, my dear friends, when you refer the trader, manufacturer, restaurant service provider, or this service provider other than the restaurant service provider to choose the composition scheme, they should not deal with non-taxable goods or non-taxable services. They should not deal with that. They should not be seller of alcoholic liquor meant for human consumption. Should not be. Should not be dealt with interstate outward supply of goods or services. They should not be dealt with interstate outward supply of goods or services. They should not sell the goods at interstate level. They should not supply the services at interstate level. They may procure the goods or services from other states, still eligible for composition scheme, but they should not deal with interstate taxable interstate supply of goods and services, outward supply. They should not supply. Being a seller of the goods, they should not sell to other state. Being the supplier of services, they should not supply the services to other state. If they supplied, they disqualify from composition scheme. They are not eligible for composition scheme. Now, important area I'm referring this. This area is important. What is there on the scheme point number C? Should not deal with supply of services through e-commerce operator who is required to collect the tax collected at source. Here, from 1st October 2023 onwards, the term goods are omitted. That means prior to 1st October 2023, what was there means supply of goods or services through e-commerce operator should not be dealt. If they dealt, they are not eligible for composition scheme. Now, hey, Mr. Supplier of the goods, you can supply the goods through e-commerce operator, still you are eligible for composition scheme is the amended provision. This I am now going to elaborate it, which is applicable for your May 2024 exam onwards. Referring here, my dear friends, 1st October 2023 onwards, the provision with effect from this. What is this provision here says? See, first point. The benefit of composition scheme, which was earlier not available to the registered person engaged in supplying goods through e-commerce operator, shall now be extended to them. As a result, these registered persons who are supplying the goods through e-commerce operator now have the option to pay the tax under the composition scheme even though they supply the goods through e-commerce operator. However, restrictions will be continued to apply for such registered persons who are engaged in the supply of services through an e-commerce operator. Hey, mister, you supply the goods? Yes, sir. Through e-commerce operator? Yes, sir. You can supply. Still, you can able to composition scheme. If you supplier of services, hey, Mr. Supplier of services, you should not supply these services through e-commerce operator. If you did so, you disqualify from composition scheme. Further, the Central Board of Indirect Taxes and Customs, CBIC, issued the recent notifications in this regard. Special provision to be followed by the e-commerce operator in respect of the supply of goods made by person paying the tax under section 10 of the CGST. How to understand this? Referring further. Question number 1. Can the composition taxpayer make supply of services through e-commerce operator? Hey, supply of services, for you, the law not got amended. The restriction is continue for you. The amendment applies only to the supply of goods through e-commerce operator and not to the supply of services through e-commerce operator. Service providers supplying through e-commerce operator, e-commerce portal are still not eligible for the composition scheme. Supplier of the goods, yes, eligible. This is the amendment. Supplier of the goods, supply the goods through e-commerce operator, they are eligible for composition scheme. Supplier of services, supply the services through e-commerce operator, they are disqualified from composition scheme. Further, can a composition taxpayer make interstate supply of goods through an e-commerce operator? No, that is not allowed. After the amendment, a composition taxpayer can only make intrastate supply of goods through e-commerce operator. The interstate supply of goods through e-commerce operators is still not permitted under the composition scheme. So what is the amendment which is applicable for your May 2024 exam onwards, which is effective from 1st October 2023, is as follows. I am a supplier of the goods, I am a trader. I am selling the goods through e-commerce operator. My supply through e-commerce operator, no problem. A trader supplying the goods through e-commerce operator, well eligible for composition scheme from 1st October 2023. Ensure that as a trader, I should not sell my goods through e-commerce operator at interstate level. I can sell the goods through my e-commerce operator through namely intrastate level. Is the amendment. That means the composition scheme applicability has been expanded to some extent to a supplier of the goods. Who supply the goods through e-commerce operator? Intrastate supply, still eligible for composition scheme. Is an amendment with effect from 1st October 2023. Further referring here, my dear sir, a particular composition taxpayer should not opt or the what we can call here composition scheme not eligible to a particular non-resident taxable person, not applicable to a casual taxable person. Hey, Mr. Casual taxable person, irrespective of your turnover, you are not eligible for composition scheme. Who is a casual taxable person? Who is a non-resident taxable person? Just I will brief you, simple manner. I will elaborate subsequently. For the time being, a casual taxable person none other than a person belongs to Tamil Nadu, where he has place of business in Tamil Nadu, his residence in Tamil Nadu, his place of business in Tamil Nadu, residential address in Tamil Nadu. This fellow going to the state of Kerala, where he has no place of business, but he want to carry the business in the state of Kerala temporarily, for time being. In that case, in the state of Kerala, the given person named as casual taxable person, in that state, for this particular person, a registration as a casual taxable person is mandatory irrespective of his turnover, but he should not choose composition scheme. For a casual taxable person, composition scheme is not applicable. Further, who is a non-resident taxable person? A person who is basically NRI, non-resident in India, is outside India, who has no PAN number. He is a foreigner, a NRI, who came to India to carry out the supply of goods or services on temporary basis. In India, such a person called as non-resident taxable person. If so, for him also registration under the GST is made mandatory irrespective of his turnover. They are not eligible for composition scheme. Got the clarity, my dear friends? So, referring here, further by bringing into notice provisions of the casual taxable person.